Hi, today I'd like to talk to you about why excessive financial services regulation in the UK is literally killing advice and creating a huge advice gap. In other words, it means less and less people are getting access to financial advice, which I really don't think is a good thing, and I don't think it is what the FCA should be all about. I'm sure they mean well, but unfortunately the huge weight of excessive regulation introduced into the UK, particularly in the last 10 years or so, has been totally over the top in my view. So what I did is I took the liberty to write some comments down before this presentation contained in these 4 boxes. Let me explain to you what I mean by all this. I won't explain everyone in detail, but just to be aware that these are some of the main regulations the FCA has brought in pretty much since the end of 2012, beginning of 2013. We had RDR, Retail Distribution Review, GDPR, to do with data protection, MiFID II, SM and CR, PROD and IDD. I'm sure there are many others. They're just the main ones I could think of, particularly in the last few years. Most of these are coming just in the last 2 or 3 years. There's also very recently new rules on giving advice on final salary pensions, known as non-contingent charges. And last but not least, the registration of trusts. To be fair, that's an HMRC regulation that's come in. Nonetheless, combined, all of these regulations cause a huge amount of extra red tape, most of which I find entirely unnecessary, because when it boils down to it, there's just one simple thing you've got to look for in a professional and in an advisor. That's trust. So what it boils down to is doing the right thing for the client to give you the right outcome. You don't need endless regulation to do that, because there are still poor practices going on. No amount of regulation will totally get rid of every single bad practice out there. It will reduce it, but it doesn't totally eliminate it. So I feel that this excessive amount of regulation, which is virtually all derived from the EU, and amazingly, most of these rule changes, these regulations have come in since we voted to Brexit, which I find extraordinary. Why are we continually accepting rules imposed by the EU, by the FCA, against large companies in the EU, such as banks and other product providers, big insurance companies, large investment companies? Why do we keep adopting these regulations which are not suitable to a country where we very much believe in the concept of independent financial advice, the idea of having an intermediary? Intermediaries do promote competition, they do promote price competition, and they do promote innovation. Wherever in the world you have intermediaries, they serve a really useful role. And I feel that the problem is that these regulations, because they're EU driven, they're all created to suit the EU market, which is completely different for financial advice compared to the UK. On the continent of Europe, in EU countries, it's typical for a bank or insurance company to give you advice. The concept of intermediary is virtually unheard of. So these regulations are there to monitor and control and get better outcomes from large companies, which on the whole are the ones who give the bad advice, unfortunately. If you just simply take the number of complaints in the UK, for example, against independent financial advisors, just 3% of the total. I think that says it all, really. So the other point to make is that all these regulations, pretty much, apart from maybe the registration of trust, they're all based on products. This is product-based regulation. interestingly, if you practice as a planner, say we can call it financial planner, but maybe better describe it as a life planner, if you don't give specific product advice, which means you can advise on a whole host of areas like taxation, cash flow planning, something called asset allocation, where you diversify clients' investments amongst an array of assets. As long as you're not specifically recommending a particular company or a particular product, if you're just generically advising, you can do everything that a financial advisor does and suffer zero regulation. Zero. This is known as non-intermediated financial advice, free of all regulations. Now, I put it to you, it makes no sense to have huge over-regulation on the one side if a product is recommended, and have zero regulation on the other side if there's no specific product recommendation, because the advice is still pretty similar except for that specific product recommendation. I contend there should be a halfway house between the two. You should be able to do both without being weighed down massively by regulation and increasing that advice gap so less people get advice. Now, fortunately, there is some light at the end of the tunnel. The Treasury's got this consultation called the Future Regulatory Framework Review. Now, I know it's not typical of governments to reduce red tape. There's a lot of talk about them doing this, but I'm afraid I'm a veteran of Yes Minister days and Sir Humphrey. Anyone who remembers watching that series on TV will know that there's always increases in red tape, unfortunately, in this country and probably in most countries abroad. Although Boris Johnson talks about reducing red tape, says they're going to do something about it, I still think Sir Humphrey's alive today and is still preventing it and wanting to increase numbers, really, rather than improve the lot of the UK. Having said that, I do think he means well. I do think Boris Johnson does want to reduce regulation, because he must realise that financial services is our biggest export. It's an invisible export, and we have the second biggest financial services export product in the world. I think that's extraordinary. So we need to protect it. So it's very important that we start creating our own regulations, modify our regulations. Don't just blindly keep adopting EU regulations, which is suitable for a completely different market. If we want less people to get advice, if we want them to pay higher charges, if we want them to have less innovation in financial services, if we want to destroy the financial services industry, the best way to go about it is keep adopting EU regulations, because that means you'll end up getting a very poor outcome for consumers, and I don't think that's a good idea. Let's protect our major export. And by the way, if you're not aware of this, we do have an EU trade deal of zero tariffs, but it doesn't cover financial services, and I think that's a major omission. So it's important that we protect it, and so let's improve the regulations. Let's lay off these excessive regulations on the top advisors in the country, independent financial advisors, particularly chartered and certified financial planners. Don't kill the goose that lays the golden egg. Protect financial services, and we will all be better off as a result.